Let's quickly just go to Addis Ababa in Ethiopia, where we have our correspondent, Perpetua Fasanmi-Peter, who right now is standing by to bring us updates as regards the ongoing discussions at the African Monetary and Economic Sovereignty Conference going on in the country. Of course, it's the last day and talks are around de-dollarization, and I think that's quite huge, most especially when we look at the influence the West has had over decades now as regards trade across various continents. But then, Perpetua, it's of course time for you to let us understand what the discussions have been and what the recommendations are as regards this.
All right, thank you so much, Lekon Obanjo, for this opportunity. Well, it's the last day and we're excited because conversations have really been fiery, if I can say that. Starting from day one, we're looking at monetary and, of course, economic sovereignty. And so from day one, we started that conversation around economic sovereignty, how that we need to get to that point where Africa can actually take charge of its own, take charge especially in terms of its economy, where it is not dependent on certain things. And so for today being the last day, the focus is on de-dollarization. And I think I'd like to put that in context because for many of the speakers here today, what they are saying is that we need first, what we need first to economic sovereignty. So we can't talk about economic sovereignty. We can't talk about an economy that can stand on its own without, catching a cold when the US Fed sneezes, without first looking at the monetary side, the monetary policy. So what do we need to do in Africa? Before I talk about what we need to do in Africa, let me talk about some of the challenges that have been highlighted. The IFS, that's the International Financial System, is skewed in such a way that it favors the global north and especially the United States of America. And so when Africa goes borrowing, the interest rate is much higher. Why is that? The reason is very simple. I mean, the rating agencies will come and say African currencies are rated junk and all of that. And at the end of the day, when we want to borrow, we borrow more expensive. And that sort of puts Africa on, it sets Africa up for debt default. I mean, that sets Africa up for that risk of, default. And another thing also is the fact that when we want to borrow money from this...
We just lost audio from your end. I think we just lost audio from Perpetua's end right there in Addis Ababa, where the AMIS conference is ongoing. And the talks have been around de-dollarization and the massive influence that the West has over markets in different continents, most especially now as it affects Africa. Perpetua, all right, so you can just continue from where you stopped as regards this skewed narrative that we've seen where we talk about the ratings and the financial, of course, capacities that the African continent does not really have access to.
That have been made so far. And one of the things we're talking about is that we should have a central bank, an African central bank. And, when that conversation came up, one of the things I did was to challenge one of the professors to say, okay, we're talking about an African central bank and all of that. And we know that some of the reasons we're having these issues is that Africa is, when you look at the African economy, it's primary commodity based. I mean, we're just extractive. We deal with extractive items, extractive commodities, all in the raw state. And because of that, those commodities are largely influenced by global shocks. When there is any global shock, talk about the Middle East crisis.
I think it's a huge glitch that we're having from Perpetua's end. We're hoping to be able to have a secured connection that is stable so that we can make meat of the information coming from Perpetua. Perpetua, can you hear me? I think it's quite challenging, of course, having the network, help you detail the information you're trying to share, but then you can still continue, all right, so that we get the details more and conclude too, yeah.
Which one comes first? So if you're talking about Africa should get into production, for Africa to produce, for Africa to get there, Africa needs patient capital. You need a lot of patient capital. You need to import certain things. And when you're importing, you're not importing in Naira, you're not importing in CFA franc because those are not convertible. What is convertible is the US dollar. These are the things that are convertible. So at the end of the day, you're still going to need these monies. You need patient capital. No central bank in Africa can provide that sort of capital to you because they do not have it. And so he's saying that the solution really for him, and I think I sort of agree with him, is having that African central bank, the sort of, takes charge of things like this so that at the end of the day, we'll be able to shield ourselves from some of those things. And I mean that African Central Bank also means that we are talking about a single currency. Now, we're not going the regional route. It's not about, okay, EAC, it's not SADC, it's not ECOWAS, it's not WEMU, it's not all of those things. No, we're talking about a situation where there is a single currency for the continent, just as we have the Eurozone, you have all of those things. We see how it's helping them mitigate certain risks. And so that's also going to help Africa, help all the countries. And at the end of the day, we'll be getting closer to what we're talking about, of course, is economic sovereignty. So I'll conclude by saying that what the key point that has been shared today so far is the fact that we cannot talk about economic sovereignty without first ensuring that we have what we call monetary integration within Africa, and that of course will give us monetary sovereignty, which will then lead us to where we are going to, which is economic sovereignty. Thank you so much, Lekon.
All right, thank you to Perpetua Fasanmi-Peter, all the way from Addis Ababa in Ethiopia, for sharing these details with us. We hope to get a more robust report from you later on, but then we appreciate your contribution.